Welcome to Fintech Chatting, presented by Tier 1 People, leaders in Fintech executive search. Follow us on your favorite podcast player or Fintech Chatter TV on YouTube.
Welcome to Fintech Chatter, the show where we cover all things fintech. I'm your host, Dexter Cousins, and today I'm shining the spotlight on one of Australia's up-and-coming fintechs solving a real problem that's getting much bigger. Patrick Connolly is CEO and founder of Anility, a software-as-a-service company innovating financial viability. So what does that mean? Well, basically, Anility uses data to help procurement and contract managers assess the financial health and corporate structure of third-party service providers that tender on public and private works. Financial viability assessments are a mandatory part of most procurement processes, and Anility leverages technology to offer a faster, affordable, and more user-friendly solution. But before we chat to Patrick, I've got a call to arms. Recent data shows the amount of fintech funding in Australia fell to 90% last quarter compared to the previous year. I created this podcast to give a platform to the fintech founders like Patrick to help promote their story to the world. And whilst we haven't seen a 90% drop in listeners, we have seen a drop. So if you are listening, please give us a share on your social media platforms. Fintech Chatter is in the top 1% of shared podcasts on Spotify, so you're already doing an amazing job. But if you could help us out a little bit more, I'd be forever grateful. Patrick, welcome to the show.
Thanks for having me, Dexter. It's good to be here.
Mate, it's great to have you. I guess, look, I gave a little bit of an intro there. This is a fintech podcast, so I'm kind of not expecting a lot of people to be au fait with procurement. Do you want to maybe tell us a little bit about the size of the problem that you're solving at Anility?
Yeah, absolutely. So for context, Anility is, as I said, a software as a service provider. We specialize in creating financial assessments to assess third-party risk. Procurement is a mandatory part of any construction project, and procurement is part of any dealings with any service provider in any industry. It's really that relationship of buying and selling between businesses. So in terms of what Anility does and what we specialize in, we're all about third-party risk, which is obviously very topical in the current economic climate.
Yeah.
Making sure that your providers have the financial backing to do what they say they'll do to deliver the works in a timely fashion and in accordance with the contract.
Yeah, so we've seen this in the construction industry quite a bit recently, hitting the headlines. What types of customers and clients do you work with, Patrick?
Yeah, generally our customers are large tier one construction businesses, utilities providers, state government, anywhere where there is either a large contract value, which obviously carries associated risks, or anywhere where a business has a large supplier base that wants visibility over their supply chain, and I guess trying to foster that financial transparency and relationship between client and service provider.
And so in terms of, I guess, the size of the problem, have you been able to kind of, get some ideas as to just how big this problem is and what a kind of value might be on that problem?
Yeah, look, the number of, if you wanted to put a tangible value on this problem, I mean, insolvencies, we've hit thousands of businesses already this year. Yeah. We're up year on year for the last couple of years. Obviously, there's a number of factors that have contributed to that. Financial health is, I guess, the outcome of a whole bunch of other inputs, COVID, material prices, supply chain issues. But in terms of the costs associated with insolvencies, we're well into the billions, and that's in Australia alone. But when you start to look at other larger markets like the US and the UK, you can almost double those numbers. So the impact of working with suppliers that don't have the financial capacity to deliver the works is inconceivable.
So, what made you kind of start Anility then, Patrick? What was the catalyst to that?
Yeah, it's a good question. I mean, my background, I started in construction. So I worked in there for 10 years, was heavily involved in the procurement space. So working with third-party service providers to manage risk. And my keen area of interest was financial viability. That led me down a path of working with a number of other credit firms or boutique accounting firms that specialized in this space. And at the time I was a big consumer of these reports, and I saw a couple of areas that I thought could be improved. And especially with the rise of technology, going back to 2017, 2018, there were new advances that would allow us to do things faster at a better price point and deliver a better experience for the customer. And back then, I sort of, working in the industry very closely, it was a common hearing that I was speaking to a number of other businesses and other friendlies within the space that said, look, we realize that we need to do these checks and these assessments, but the way that they're currently being delivered doesn't really fit for purpose anymore with, constantly changing landscape. So, as most entrepreneurs do, I said, look, I reckon I can do this better, and took a punt, which has turned out to be quite a good punt.
So one of the things that kind of quite fascinates me is if I look at the consumer market, there's so many solutions, technology solutions out there, credit reports, credit bureaus, credit checks, references, KYC, a whole host of, technology solutions. Yet, you're talking about a market that's worth billions and billions, and you're kind of, it seems to be way behind from the consumer side. Is that a fair assessment?
Yeah, absolutely. I mean, it's business to business risk is, astronomical. And in particular, when you're talking about procurement, there are trillions of dollars every year that typically what's happened in the past, it's been dominated by a number of large global players that have managed this. But these players, it's the typical David and Goliath sort of analogy that I'll use, that a lot of these bigger players have become comfortable with the market share that they have, and are less inclined to innovate because they have the market share. And so they sort of rest on their laurels that the market wants, they think the market wants what they have. And so it's only been sort of the last few years, probably COVID's accelerated a lot of this, and in particular in the financial viability space, where businesses have started to look elsewhere around how can we leverage some really best-in-class technology to take what historically has been a very manual, tedious, slow process and make it faster, more affordable, and provide a better experience. And that's what Anility is really set up to do.
And so who are some of the clients that you're working with now?
Yeah, so local government is a big one. We got a number of councils that we work with across Sydney, New South Wales, some of the top end builders as well. So, if you look on any of the ENR top list of the top 50 list of contractors, that's our target market. There's some utilities providers, some big names as well. So any of these really big businesses that place a focus on risk and understand the importance of when a supplier or a major contractor goes down, that's the ideal customer for Anility. And when you sort of strip it back a little bit, financial viability and doing assessments and monitoring of suppliers, it's actually mandated on government projects, so state and federal. So they are huge consumers, especially with all this infrastructure pipeline that's come out. But then when you start to look as well as local government usually follow trend and best practices that state government provide. And so there's 516 councils across Australia that are all doing this in some shape or form at completely different extents. But it gives you some indication around the size of the opportunity, just in Australia alone.
Yeah. And is the platform, is it the potential to go global, or are you just focused on us?
Yeah, absolutely. I mean, for us, blinkers are on at the moment where we're going really hard at sort of cutting into the market now. We realize that we're coming up against a couple of big players in the space. So being clever around distribution and really being really product-led at the moment, going in there and demonstrating, letting the product talk for itself, doing things faster, doing things at a better price point, and delivering a better experience for both the customer and also the entities that we assessed is a real big focus for us at the moment. and it's paying dividend. We're getting a lot of word of mouth, which is fantastic at this stage of the business. So, we spent, before we sort of launched into the market, we spent a couple of years without building a thing. It was a big decision at first. We said, do we want to sit on the sidelines? But I think it was the right decision looking back now, because we truly do have a best-in-class product, and that's sort of been resonated by the market.
Awesome. And what are some of the cool things that you're working on at the minute?
Look, there's a stack of things. For us, we launched into the market trying to disrupt what was currently done, your traditional procurement type financial viability assessment, come in and, as I said, do a faster, cheaper, better product than what our competitors are doing. Off the back of that, though, because we are using technology and automation, there's things that we can provide additional services that are that just aren't possible by some of our competitors due to us leveraging technology and them being mostly manual. So, ongoing monitoring and different styles of reports and different ways of delivering them and surfacing data. That's something that we're looking sort of more forward to towards the back end of this year and early next year. But I will say, as part of that, we don't like to set our roadmap too far in advance, being this early on. We like to actually get feedback from our customers and work closely with them, because at the end of the day, you want your customers to inform your product roadmap. So it's going to market with what we have, and then listening to our customers and seeing where the best next place to put our attention to.
Awesome. Now, I guess in terms of the kind of journey that you've been on, Patrick, how long has Anility been in existence for?
It's been a fun journey. Yeah. So we incorporated in 2018 formally. I'd probably say even a year.
So when you say were you kind of solo founder?
Yes. So
the royal we, I find myself saying that all the time. That's it. Got this kind of alter ego sat next to me.
I've got both sides as well.
Yeah.
So look, solo founder. To be honest, hadn't started a business before. Was just a young, hungry, driven young lad that was in construction and thought, you know what, I want to take the world on. Let's see what we can do. And naturally, this was my area of expertise. Spent probably 18 months, sorry to my last builder that I worked with, but, this was ruminating in my mind for a lot of years around how I could go and solve this. I had a number of ideas that I floated around with past colleagues and stuff, which ended up being, U-turns, come back, didn't work. And then sort of just said, look, if I'm going to do this properly, I was 22 at the time, or 23, I think, let's take a crack at it. So resigned from my last job, went out, applied for an accelerator with the University of New South Wales, which was fantastic. Shout out to UNSW. Got connected up with a bunch of entrepreneurs, started to try and learn the basics of business. And as I said, what we initially did was just started workshopping with a bunch of friendly builders and some suppliers, and said, look, we recognize there's a problem here. Let's strip back everything that we like and hate about the current service, and let's try and build from scratch. So we spent 18 months workshopping, building different things. Again, solo founder, bootstrapped, sort of living off the ramen noodle diet, and did that for, close to 3.5 years. Eventually sort of built a product that we thought was market leading, started to get some traction, brought on our CTO, probably 3 and a bit years into the journey. And then the last sort of 12 to 18 months has really sort of started to hit our straps. But I would sort of put it back to those early days. And even now, even up until probably 6 months ago, it was a grind. It's always a grind, but like 1,000 no's from customers, just didn't have a trickle of revenue in for the first few years because we didn't have a product. The market also wasn't ideal at the time. We were sort of, if I go back 5 or 6 years ago, some businesses, you get some builders that said, look, mate, I know my suppliers. There's nothing wrong with them. I don't need to do any checks on them. Just that real old school mentality. And I sort of just always knew that the market would catch up, and just hung in there. And then fast forward sort of to where we are now. I think it's bad to say, but I think COVID really helped us in the sense of a lot of businesses turned south and turned to rubbish during that time. And, the media helps with, you just have to go on LinkedIn or the news every day and they're saying new insolvency, record numbers of businesses going out of business, looming recession.
Yeah.
So it puts a bit of fear into people that say, okay, hang on a sec. Maybe we need to start paying more attention to the businesses and the suppliers that we're working with, which has turned in our favor. And, the future looks bright, right? You've got the Olympics in Brisbane coming up in a couple of years. So you can imagine the amount of procurement, risk management that's going to go into that, big infrastructure pipeline. So I really credit it to that grit and determination and just willingness to hang in there in the early days that's sort of starting to prove pivotal.
So as you've seen things kind of turn around, what have been the lessons that you've learned as a founder, and maybe some of the things that you look back on and think, hey, if I had my time again, I might do that a bit differently?
Yeah. I mean, the first thing, we've been very frugal with funds, to be honest. Like, I think that's one of the real strong suits that I've always instilled. Don't throw funds around. We don't need it. We needed to do that because we bootstrapped. But I would say a lot of time in the early days, I wasn't clear on what we were building, and I wasn't clear on the mission, the mission statement. And what I mean by that is every time we speak to a different business that have a different way of doing things or a different problem, and we just, back in the early days, we weren't laser focused. We were sort of exploring every different option and going to spend a month or 6 weeks investigating every different piece, which in some ways we had to figure out what the right way forward was. But I think we could have been a lot more clever around having just a really clear focus, taking on feedback, which is always, you need to do that, but not investing the time in going out, workshopping, prototyping, whole bunch of stuff. So just staying clear, I guess, on what it is that we're trying to achieve and put the blinkers on. Absolutely. I think that's a lesson learned for sure.
One of the, I think, challenges is, that everybody will say, take feedback. And it's, look, I'm not dismissing that, but I also know that if I went out and asked my clients what they wanted from me, they'd say, yeah, just do everything that you're doing, but give it for free, right? It's like, and I think it's really difficult to kind of go, okay, well, making that distinction between what's feedback that we should take on and what is feedback that we should just say, hey, thanks very much, smile and wave and, kind of dismiss it. How have you made that distinction, right? Because I think it was, Henry Ford who said, if you ask a customer what they want, they'll tell you a faster horse. How did you make that distinction as to what to focus on?
Yeah, look, I think the biggest thing for us was just trial and error. I think just after 3 years of trying to explore every option, trying to probably listen too much to everyone's feedback and take it too to heart, I sort of started to say, well, hang on a sec. That's not what we need to do. It's taking us down the wrong direction, the wrong rabbit hole. So I think now it's also processes within the business. I think now we absolutely catch up regularly with clients to talk and get feedback, and we prioritize our roadmap based on feedback. But now we sort of have more of a refined process where we won't just jump into building things. It's if one customer is saying that they want something, let's go and validate it with another 10. And if we're hearing a common thing, then let's put a bit more time into exploring it instead of taking everything at face value and building everything, which obviously, you've heard the old saying, you build everything and you focus on everything, you specialize in nothing.
Yeah.
So,
or to coin a term from your industry, jack of all trades, master of none.
That's exactly right. That's exactly right.
And in terms of investment, have you gone down that path and have you looked to bring in external investors?
Yeah, we have. So we raised a very small pre-seed round back last August. Shout out to our investors, CP Ventures as part of that. They really they bought into the vision back then. The world was turning to shit pretty much back then, and they still had enough belief in myself and the team and the product. And so, we've raised those funds. And look, we're the type of business where we absolutely want to capitalize on growth. But as I said, we've been frugal with how we spend our money. We're not wasteful. We put it into the right spot. So, capital raising at the moment, the market is a very interesting one. Luckily for us, we don't need to raise at the moment, which is fortunate. It's we've got a lot of strong early adopters and customers that are really funding a lot of our growth. So we'll continue to do that. And when the time is right, we'll then explore pulling the bullet and really putting fuel on the fire and blowing this up.
Yeah, as I mentioned, Patrick, in the intro, the numbers are down, I think, almost 90% compared to this, Q2 in 2022. What advice have you got around being able to, kind of just run a tight ship and make it through this period? Because it will bounce back at some point. I'm not sure it'll be 2021 levels, but it will definitely turn. What's your guidance around just making it through this next 6-12 month period?
Yeah, look, it's a great question. Every business is different, right? Everyone has different needs. But I think for us, what worked really well was we didn't hire until we really needed it. I mean, everyone that you hire in the early days needs to be a jack of all trades. You get generalists to begin with. As you scale, you get specialists. So
please tell me you didn't hire a chief of staff.
No, that's definitely not for us. I think it's really around just looking at your resources and figuring out, do you really need all these people? And that sounds bad, right? Because I'm not encouraging people to let staff go. But I think to make your business survive during this period, it's really cutting down to the bare minimum of what you need to operate, continue to grow. I mean, do you really need these extra, whatever they are, resources, or can somebody else put an extra 15 or 20% on their back and share the load to get through? So for us, it's always been, we take a little bit more on ourselves and keep the extra cash in the bank for whatever we need for growth or for hiring or desperate scenarios. And then as we start to bring on new customers and self-fund the business, then we can bring on the additional resources. So, that's sort of what's worked well for us so far.
And have you seen, given the kind of economic conditions and the rise in insolvencies and the challenges that we're seeing out there, have you seen a bit more interest from investors in this type of product?
I mean, we're in a very fortunate space, right? Like we are the financial viability or third-party risk management space is really hot right now. It's similar to AI, right? It's very hard to trump AI, but a SaaS platform that's in the financial viability space that's using AI like Anility, it's a very good space to be in. So absolutely, we've had interest. We've had strategic partners approach us. But for us, it's finding the right partner. I mean, we're not desperate, as I said, to take funds on. We don't need funds at the moment. We're a big believer in self-funding and self-growth. But absolutely, we would, for the right partner and for the right growth, we would definitely take capital on. But it's really just, it's fortunate the space that we're in. It's tricky, right? Because I know there's so many businesses that are struggling right now, and there are so many technology businesses that are just, the once we're in a hot space that's sort of cooled down now. For us, we're in that, going through that high period. So it's important for us to capitalize on that at the moment.
What's interesting, you talked about the partnerships piece, and I think, when you kind of hit economic periods like this, everybody goes hunting for partnerships, thinking they're the panacea for growth and, in a tough economic conditions. And it very rarely turns out to be the case. And I think you're right. You've got to be really careful and diligent around the partners that you look to take on. And, is there a real synergy here? And is it, uniformly agreed right across the business, right? Because if you got the guys who are in the corporate venture arm getting all excited about you, it's not their lunch that's getting eaten, right? It's usually somebody else in the business.
I mean, it's an interesting one, right? Like partners, they're a double-edged sword. When they work, they're phenomenal. But when they don't work, it's a lot of time and effort and mental disturbance that you have to invest upfront with potential no real return, or it might damage your business. So I'm always very cautious around entering into partnerships, whether it's with resellers, whether it's with go-to-market, whether it's with investors, whatever that looks like. You need to make sure it's the right fit and everybody's motivated in the same way. Otherwise, you can invest all this time and then at the end of it, there's no real reward. It's more around how do we back out of this without having to get lawyers involved.
One of the other challenges for not just founders, but I think everybody at the minute is kind of managing mental health and dealing with the setbacks and dealing with the challenges that come, as well as now doing that against the backdrop of all of the kind of bad news and the challenges that are coming around. How do you kind of keep yourself focused, sane, kind of mentally sharp as we're navigating through this period, Patrick?
Yeah, it's a good question. I mean, a couple of years ago, I realized that mental health is just as important as anything else. I mean, I went through a big fitness journey, I'd say, where I started to do a lot of running, and that sort of led me down a path of doing ultra endurance events. So I did a 100-mile run, which is 165 kilometers in December. December just passed, which took me about 34 hours of straight running through the Blue Mount, down at the snow, down at Perisher and Thredbo. So,
have you got any easier tips to manage mental health?
Yeah, so it's weird, right? Everybody has their own medicine, but for me, it's pushing myself to those extremes. It's almost like when I come back to business, I'm like, this is easy. Like, mate, if I've just run for 34 hours straight in the snow, coming back and managing a business and growing a team and being there for my team and supporting comes easy for me. So a big part of my resilience and success and sticking in there comes down to the amount of time that I invest in my own mental health and my fitness and family and personal life. It can be very easy sometimes to get that balance wrong. And when you spend too much time at work and don't see mates on the weekend or family or fitness, you can definitely feel it when you get back to the office on Monday. So I really tried to now find that right balance. Also got a beautiful little 15-month-old daughter, which is a good refresher to go home to every night as well. Beautiful wife. So yeah, it's just finding that balance, and it's always a constant challenge to try and find the right medium. But I'm getting there, which is good.
Awesome. Now, as a first-time founder and bootstrapped, you kind of green to the kind of challenges that you've faced over the last few years. Where have you gone to for advice, support, that side of the equation?
Look, I would say if I was to do this all over again, a lesson for Patrick Connolly, it would be in the early days, get a really strong support network around you, the people that have done it before, advisors, mentors. I think a couple of the lessons or the learnings or the failures early on could have been avoided if I did so. Again, I was just a hungry green guy straight out of construction that said, look, I put 100% faith and confidence in myself to deliver. And I went out with no real support network, no co-founder, no advisors, mentors. It was just me knowing what I thought I knew. I'd say the first real support group, which was phenomenal, as I said, was the UNSW founders. Bunch of great people as part of that as well. But over the years, I've really started to form a really strong advisory network, which I am forever grateful for. That's really been a key piece that has sort of moved us to where we are now, moved the needle significantly. So yeah, I think for anyone out there listening, if you haven't already, I think it's so important to get really good advisors and mentors and people that you gel with, people that you trust, and also that sort of carry the strengths that you don't have, so that you sort of get a more of a whole-rounded team, especially if you're a solo founder. That's something that I put a lot of focus on over the last sort of 12 to 18 months is now that we've got a product that we believe is market leading, it's now how do we work on the business? How do we get the right people around us so that we're in a really strong position for growth?
Now, one of the things that I'm interested in is kind of the move and the juxtaposition of the moves that you've made. The fintech industry and the construction industry, two very different, right? Ironically, I've worked in the construction industry myself when I was, a young lad. Yeah. And yeah, look, they're two very, very different worlds from what I can remember. What's been your take on the fintech industry and kind of how do you view it, as a honest assessment as to where we're at and also what we need to do to evolve?
Oh, it's an interesting one, right? It's an interesting one. I think, being in this, I wouldn't say, Anility sits in between a couple of verticals or adjacent. We are half procurement tech or procure tech, construction.
Oh, mate, we don't need any more of these, right? I think this is the biggest problem Australia's got is we've got reg tech, fintech, blockchain, legal tech, prop tech. It's like, look, guys, right? Like, we ain't big enough country to go off and do these kind of micro, I think from a business perspective and how you market it, sure. But I think as a community, we kind of, we need less barriers.
I agree with that. Look, in terms of the fintech space, like I've seen it evolve, some people might know this, but Anility, which was initially we were called Procure Build, we were one of 10 companies selected to be as part of the open banking pilot that got selected by the government back in
2017, wasn't it?
2017.
Yeah.
So they thought the use case of open banking with Anility in construction tech was phenomenal. And back then, there was nothing like open banking. It was sort of like it was a talked about thing, but there was just this massive journey. We went through the initial process, but we ended up declining it because it was just, we didn't have the people on the team and the staff to be able to meet those requirements. We were just a very, very small startup back then. So throughout those years, I've seen it evolve, and you've got, great players in the space now. So look, I've seen it evolve, considerably during that time, but to your point earlier in this podcast, I think it's evolved significantly in the consumer space. I think there's still a lot of work and opportunities in the business to business space to manage that risk using, financial data and other fintech type data streams. So yes, I've definitely seen it improve, but I think there's a hell of a lot a way to go, especially in business.
Yeah, look, I agree with you. I think it's one of the biggest letdowns has been CDR, from where I sit. And I think the main reason for that is it's called the consumer data right. And all the discussions now are still around policy and regulation and very little about how does this actually, where the products to benefit customers. And I agree with you, Patrick. I think from my own position, I would see business to business as being a far greater use case for open banking, CDR, technology, exchange of data, for exactly the reasons that you've talked about. And look, the reality is that I think here in Australia, B2B is a far stronger, commercial proposition for a fintech startup than B2C.
Yeah. Yeah, look, I'd agree. And I think also it's interesting, right? Because especially in the space that we play around third-party risk and businesses sharing sensitive information with other businesses for the purposes of a due diligence check to make sure to see if they can get a contract. I think there's always a fine line between asking too much and one of the business saying, no, I'm not giving that, versus giving enough information so the client feels satisfied to award them the contract. And so when you start to get to things around banking data and transactional data from bank accounts, there's a line there that still needs to be explored around how there's no question around the use of the information, because it's very clear it's absolutely useful, but it's more a question around how do we educate the market and how do you get a small plumber that has a shovel in the back of his ute and a dog, how do you get him to open his books and share that information with Anility or another service provider to then go and share to the client?
Yeah.
Because that's his whole business, right? His bank account is everything. So I think there's whilst regulation is one thing, I think there's also a mindset change.
Yeah.
It's going to take some time to be able to implement that and get the most out of that type of information.
I think what's really interesting about that point that you make there, Patrick, as well is, look, we're talking about your business thriving because the economy is not. And particularly here in Australia, small business is the engine room of the economy, right?
Yeah.
And I look at it just from my perspective, when I've been invited to go and, pitch for work with large corporates and procurement gets involved, it's forget it, right? I can't dedicate the resources to just complete the application. And the amount of information that you have to provide, where you're thinking, look, most of it's not necessary, but at the click of a switch, you could have access to all of this information anyway, right? Rather than saving. And you think of the amount of, we keep talking about productivity, the amount of productivity that is lost in business through these archaic processes that, not only does one person on one side have to fill in all the data, person on the other side then has to go and manually check it all as well.
Yeah, I mean, like that is, we've just hit the nail on the head with one of our value propositions, right? It's trying to make the experience for both sides, but in particular the entities we assess. How do we make that seamless? How do we give them their time back? Why do they have to go and spend 3 hours or 4 hours filling out a really complex spreadsheet?
Yeah,
anticipating an assessment request. There is so much best-in-class technology out there now. Surely we can do things faster and make it easier for everybody. And that's exactly what we've done.
Awesome. Well, Patrick, it's been fantastic to have you on the show. Thanks for sharing, your experience as a founder and also the great work that you're doing at Anility. We get amazing talent listening to this show. If you're hiring right now, what's the best way for people to reach out if they like what you've shared?
Thank you. Please, anyone that wants to get in touch can contact me at pconnolly@anility.io.
And website?
www.anility.io.
Awesome. And as always, folks, you can get in touch with me on LinkedIn and Twitter. If you're coming back to the show, thanks so much for your support. And if you just found us, make sure that you follow us on your favorite podcast player. And please consider leaving us a review if you like the show. It really helps me promote great founders like Patrick and great businesses like Anility. Until the next episode, keep well. Fintech Chatter is produced by Tier 1 People, leaders in Fintech executive search. We'll find world-class leadership talent to build world-class Fintech ventures. And you can find us at tier1people.com.